Hello guys, welcome back to ESENtaxa. Vito here, and in today's video we are going to talk about the dividend trap if you want to move to Italy, or if you have a company that basically gives you dividend, releases dividend, a foreign company, and you're living in Italy and you're willing to receive all these dividends, but you got by surprise for a huge amount of tax to pay. So stay tuned, always in ESENtaxa, because we release this kind of video, this kind of content that prevents you to make mistakes if you want to relocate in a specific country. And here in ESENtaxa we are the #1 channel that in English language explains you everything about the Italian tax system, all the details of the law, some unfamiliar tax schemes, and in the description below the video you can contact us since you have our calendar link to book a consultation, 20 minutes, 30 minutes, 1 hour call, 2 hour calls, and also we provide you tax simulation to better understand with numbers if the relocation to this country makes sense or not. We cover also other jurisdictions such as Belgium, Republic of San Marino, Albania, Portugal, and we're moving to other European jurisdictions in order to explain you also the way to save your taxes in other European countries. Now, going back to this topic, why I'm talking about dividend or dividends trap? Because this is a classical issue that we are encountering with our clients. So some clients of us, they are telling, okay, I want to move to Italy, I have a specific reason to move to Italy, but I want to live out of my dividends. And my dividends are coming from a share of companies abroad. So it's perfectly fine. I have my company abroad, I'm running a business abroad, a legit business abroad. It's not just a classical example of one-man business owning a foreign company living in Italy, which is not legal, and there is plenty of video in which I explain about it. This is the classical case when I have several companies, several investments, share around, and I receive dividends. Now, like in all countries in the world, when you receive dividends, you normally are subject to a withholding tax. A dividend withholding tax. Every country has his own withholding tax. So it's called WHT, just the acronym, and some country they might impose the dividend tax for non-resident simply because you're receiving a dividend from the country where this dividend is generated, where the company is located. So, and as a non-resident, you're entitled to receive a reducted withholding tax such as 10%, or 15%, or also in certain cases also 0%. So this is normally the withholding tax you're subject to whenever you receive the dividends from abroad. But since you're Italian tax resident, you're subject also to the withholding tax imposed by the Italian government, which is 26%. Okay, now be careful about this point. These numbers change based on the convention to avoid the double taxation that Italy has stipulated with the country from which you are receiving your dividends. So far, so good. And then what you expect, also our clients are expecting this, that it's true that Italy imposes you 26% on your dividends, but then you can simply subtract 26% with the taxes that you have already paid on this dividend, because normally Italy applies the tax credit method. So you're not going to pay 15 and 26, but you're going to pay 26 in total minus 15 or 10% that has been already paid abroad. Well, the dividend trap is exactly this. It's not possible. Italy is the only country in the world that doesn't apply the credit method on dividends. So the credit method on dividends doesn't work. And if you look at the convention that Italy stipulated with all countries in the world, there's always the specification. So whenever you receive any stream of income from abroad, you're entitled to receive the tax credit method, tax credit with the taxes you pay already abroad, only if the income that you receive from abroad flows not into a dividend tax, but into the ordinary progressive taxation. So Italy has these two situations. One is the progressive taxation rate, which it's applicable for the most of the incomes, but it's not applicable for dividends. So whenever you have a situation where your income is subject to Italian withholding tax of 26%, which has the Italian name, the infamous Italian name called imposta sostitutiva, which is basically known worldwide as withholding tax. When we have this, you cannot use the tax credit method. So, and here comes the trap. So you have your dividend taxed at 15%, and then you have to pay full 26% of it. You see? So you see your dividends completely gone. Half of your dividend is gone. Now, the only thing it's possible to do, it's called a mitigation, that basically it's a sort of which is a sort of technique to mitigate this problem. So Italy basically, it's true that doesn't allow you the credit method, just allows you the border net. Well, it's an English translation of an Italian word called netto frontiera. Netto is net, frontiera is border, just to get familiar with some Italian acronyms. But because of this, you can actually be subject to 15% on your withholding tax taken abroad, in the worst case, and then only what remains is subject to 26. So it's not going to be the sum of these two. It's not going to have 41% tax pressure, but it's going to be 15% on your dividend, and what remains, it's taxed to 26, which is basically an overall taxation of 37–38%, if I'm not wrong. You can make your calculation by yourself. You can check it. So it's called just a mitigation called netto frontiera. Now, if you're living out of dividends, so the purpose of this video is basically tell you, be careful about this issue. If your purpose is living in Italy out of dividends only, maybe Italy is not the place for you. And we are telling you this against our interest. So we are honest here. We check if the country makes sense for you or not. Unless you have dividends coming from a country that imposes zero withholding tax, and this is the case of UK. So UK limited companies release dividends to non-resident at zero withholding tax, then you will be only subject to 26% tax in Italy, which is not that favorable taxation, but still is nothing compared the two taxation combined with the two countries. So I hope I was clear on this subject. Be careful when you move to Italy. That's the reason why always contact ESENtaxa, contact us in the description below the video. info@esentaxa.com is our email if you want to write us, or if you want to straight have a consultation, you have a calendar link through which you can have 1 hour call, because we can discover together any other possible traps that you might encounter and you didn't expect, you didn't think. And then you already moved to Italy, you're thinking to move to Italy. Because these kind of things, unfortunately, always happen, are discovered only after you become Italian tax resident. A lot of clients has this issue. You already moved to Italy, you become Italian tax resident, then you discover that this issue is there in the convention to avoid the double taxation. Okay? Thank you for watching the video. I'll see you to the next content. Bye.